Good morning and happy Tuesday. We're here to look at this chart, see what kind of stuff we can mark up, find some good trades today. Alright, so we're on the 15-minute candles to look at certain zones, like this pre-market low right here, at the bottom of this wick. I'll put the weekly low at the bottom of that candle. It's last week's high. Here's our weekly high. Put that on this candle right here. Right there. Been so chilling on that. Drop back down to the 1 second. And just sit back and wait for a pattern to present itself. It's a bit early, still 12 minutes before market opens, but now's when we go and review some trades from yesterday or previous days, just to see. It's Tuesday, so this is some Tuesday trades. Pre-market divergence is really nice. Looking like a good long setup. Two big up moves. This is pulling down. This is just continuing up. So you touch the bottom line. Been up for a short right here. So now it looks like this coming up. Switch to an up pressure system here. Blue line moves are so huge right now, it's hard to tell. This is a short area right here. Just there. Let's see if we come back up to one of these. Some had short some. Just barely came up here. It's hard to tell which way this thing's gonna go. What I was thinking, pump up there. When you reach the top. Waiting on a good divergence. Line wants to go long, orange line wants to go long as well. Mutual uptrend right now. Up here. Expect this to go down. I need it to come up here before I can enter. This area is hard because this is definitely some lower pressure here. Couple minutes, but we had this long midline and wave. Very good signal. Very good divergence. Very good lower half pressure. We would just need that touch at the midline to be confirmed, and I don't think we're going to get it on this one. I was very interested back here. No, back here. I saw this start, but there wasn't enough down pressure. I'll have to double check the. Be a short here if this were still going. That's good entry. Okay. Let's go down there. How long has that been going on here? 4 minutes. Possibility of a short here, but the way it's setting up, it's not going to be. Mutual uptrend here. This is getting flat. This is steady rising. We're in nut pressure. System for 2 minutes. We get a dip to the midline. We could go long. Didn't quite get there. There's the dip to the midline. We'll put in a right here, see what happens, but I'm not trading this one. It was just a little bit too mutual in there for me. There's the divergence. I see it now. But that's the divergence for a short. I guess there's a reason I had a weird feeling about it. Now it's just a big giant mutual uptrend. Nothing I can do except for wait until it diverges. We're at last week's high, which we played around with yesterday. See what happens today. So just synced up over there.
Some form of forward thinking. Look at the economy. Growth has been solid. The labor market is solid and still at historically low level. It's not an economy that feels like it's suffering from very tight monetary policy, but I would say that policy is still restrictive.
President Lagarde? I would say that it's a nice concept, interesting, and many of the terribly talented, brilliant economists in this room actually are delighted with discussing another neutral rate. But honestly, as we're getting closer to target and to where we should be, or are where we I think that discussion becomes
There's a little bit of a short divergence, but it is still kind of synced.
methods leads us to believe that it is higher than where it was before the great financial crisis, but it's relatively low as well compared, for instance, with what the US is. But it's nice to do research on it, but to use it at the moment where we are as a guiding principle to where we should be, I don't think
is this divergence here
appropriate.
Andrew Bailey?
as a short.
Well, that sort of continues what I was saying earlier. Again, I don't use it as a sort of a guide to where policy should be.
Downtrend.
But I think this whole concept of restrictiveness is, of course, critical to our judgment because that's critical to the transmission mechanism of policy, which we have to judge every time we meet. So that's a judgment that, in a sense, we renew every meeting we have. I think I'd rather agree with what Jay was just saying. I think in our case, policy is restrictive at the moment. It's going to become less restrictive based on the curve that we've got in the market. That's what I would expect. We will judge it each time.
Governor Rhee, similar.
I have nothing to add.
Yeah, how would you see it, Governor Ueda?
Yes, so we also estimated something like the neutral rate a number of times. But the range of estimates is very wide. So, but at least we think we can say that the current rate is below neutral. But other than that, I would refer to what Jay said a year or two ago in the Jackson Hole conference, which was like, we are guided by our stars, but under cloudy sky.
President Lagarde, can you talk to us about scenario and why this is, because of the shocks and actually the changes that are going very fast, why scenarios make more sense as a template of the economy?
Oh, okay. So this is a topic that we have largely debated as part of the strategy assessment that we conducted in the last year. And I think, in fairness, the baseline, which is, the essential projection on which we work and we determine our monetary policy stance, holds
Setting up
and
for a long,
is
hitting this
decisive in our consideration.
midline.
But at the same time, our staff has, I wouldn't say forever, but as long as I know myself, has always conducted scenario analysis, sensitivity analysis, in order to arrive at,
It's just a mutual downtrend.
solid,
They're not really
baseline. It is probably
gonna be done
the
here.
case that we
There's
will
two
do
good
more of
spots
it,
that I
more systematically,
had
that
interest
we might publish more
had
of it
interest
than
in.
we have published, I think, in the last few years,
Go ahead and look
in
at
four circumstances
those.
we have published scenario analysis. The invasion of Ukraine
No
was one,
trades at
COVID
all
was
because
one,
it was a
oil
weird
crisis
day.
as well, and the tariff threats.
Let's
So all
see.
those were exogenous factors that were sort of hitting
I
our
think it
screen.
was
I think we might do more scenario analysis
here.
that will be looking at the longer term trends
South
that will affect our economy, and that will inform and strengthen our baseline, enhance it probably in its reliability. So that's what we are debating at the moment, how this is built, what assumptions we make, what choices are decided in terms of publishing will be determined by the Governing Council in good intelligence with our staff.
Yeah, and Jay Powell, on scenarios?
So for many years, we have used scenario analysis internally, and
Here,
I
though.
personally find it very useful. I think many of my colleagues do too. You have just many different kinds of scenarios. We have 6 or 7 at every FOMC meeting. They're often the topic of discussion among governors and at the meeting. We have not taken the step of using them as a public communications device, and that's a big difference. So that's one of the things we're going to be talking about this fall. We will wrap up the first part of our framework review, which is the consensus statement, our monetary policy framework. We expect to by the end of the summer, and then we're going to use the fall meetings to look at communications ideas, and that's one of the ones we'll look at. I will say it has a lot of appeal and a lot of questions, and so my expectation is if we're going to do something in that area, it's going to be putting a toe in the water and not just throwing ourselves in, over Niagara Falls on it. So I can imagine a situation where we would try that in a particular circumstance, but for us, we're just going to do the work and understand it as many other central banks are doing now.
In our case, we use the scenario analysis in our risk management section as a kind of representing the tail risk. But I have to read the ECB report, but if we have to move that section into the more forecasting section for public communication, I wonder whether it's going to be easy to get some consensus, which scenario we have to do it among our probably members in the monetary policy meeting. So because that scenario and the underlying assumption may be much harder to communicate, to agree among the members. And also, it's specific to us, but how I can differentiate the previous approach of risk management section to the forecasting that I have to think over what we have to do.
So I think 2 things I would add, and it's very much in the same spirit as colleagues. One, we introduced 2 scenarios in the May round and in the May report. For me, they were very useful. They were either on either side. They weren't symmetric, by the way, but they were on either side. For me, they were very useful in terms of my decision making because they helped me to answer the question, given the uncertainty. If I'm wrong in my judgment, how wrong am I going to be? Do I think I'm going to be? And what would be the consequences of that? And what would we then have to do to deal with them? I mean, is it manageable? And that was helpful. And then I think the question, coming back to what Jay was saying in terms of public communication, I mean, this is the big step, I think, and it is challenging. I'll tell you why, because I say this quite a lot. We make a lot of conditional statements. You may have detected this in all the many interviews you do. And I'm not making a personal comment now, Francine, but a lot of those conditional comments get immediately translated as unconditional comments. It's sort of life.
We're quite careful, but
Yeah,
point
no,
taken.
it's not personal. You know, this is the general point. And so the reason I say this is that if we, and that's about the central case, by the way. So if we introduce scenarios, that's a message to us that you're going to have to do this very carefully in that world, because to get the point across about, there is always a range, there is always uncertainty, there is always risk. How you calibrate those and how you, as Jay was saying, how you communicate those publicly is critical, but pretty challenging, frankly, in that environment.
Governor Ueda?
Yes, we also carry out many simulation exercises about scenarios, but we have not, as far as I know, published them. We do discuss in our quarterly reports qualitatively what risks we have in mind. On top of that, I would say, in a very rough way, we are carrying out something like a risk management approach to monetary policy making, which is probably a bit similar to what Christine was talking about yesterday. I can't come up with a good example, but risk scenarios, thinkings about tail risks, sometimes do affect our monetary policy making.
Can I ask you all about the dollar, everyone's favorite subject? So when you tune out noise, right, of the past few months, what has really changed about the dollar? Governor Rhee, are we really seeing some sort of paradigm shift in the status as a reserve currency that means historians will look back on 2025 as some sort of pivotal year?
I don't think so, especially in case of Korea. Our Korean won has appreciated significantly in the last 2 months, but I think it's mostly due to the very unique situation that we had. We had a very unexpected, unnecessary martial law declaration in last December, and after that, this political risk, together with the slowdown in our economy, really make Korean won depreciate much more than our fundamentals explain. So, in some sense, the appreciation that we have observed in the last 2 months, in some sense, normalization of our currencies. And as for the kind of long-term shift of the dollar sentiment, we have discussions, but looks like people are talking about it, but at this moment, they keep the dollar assets while they're increasing the hedge ratios. So at this moment, I think the lion's share of the impact, BIS report show this one, is impact is mostly moving from the unhedged to the hedged positions. So we have to see what will happen in the future.
Yeah, Governor Bailey?
Well, I'd say two things. First of all, I think that it's important to bear in mind what the definition of a reserve currency is, and how it's evolved over many years. So I like John Ray. I don't see there being a sort of a major shift at the moment. Not least because in this day and age, the definition of a reserve currency has as much to do with the supply of safe assets into the market that can be used for all the purposes of sort of collateral and security that they are, as much as it is about a sort of pure exchange rate. So I think we're a long way off that change happening. The second thing is going back to something Christine was saying earlier. I mean, when we look at financial conditions,